Hey everyone, welcome to the Newbie Real Estate Investor podcast. I'm Jonathan Boyle with my co-host Joey Chan, and we
Hey
have
guys.
special guest Jason Yarusi today. Welcome to the show.
Yeah, hey guys, great to be here.
Hey Jason, how are you?
Doing awesome, doing awesome.
Great, man. Great to see you. You look awesome.
I'd be doing better if I was in Texas. Our friend Jonathan here. We're still locked up here in New Jersey, but psyched to be on the show, guys.
Yeah, I really do enjoy it a lot more here than Jersey right now. But
So Jason, a little bit about yourself, a little bit about your background and fitness. I know you're big into that as well.
I'm an active real estate investor and syndicator. I live here in New Jersey, but our main investments are out of state. Right now, we're general partners across just right about 800 units. We focused on properties that are not performing, whether it's the owner side or the property side. We go in there and improve them through a repositioning plan. And we use syndication to do that. Basically, we pool funds from investors so we can go in there and buy larger properties so we can all benefit from the economies of scale. And throughout that, we've built our brand, the Jason and Peely Project, with myself and my wife, where we host a podcast that we talk on mental fortitude, improving health, and growing wealth. And through our learning phases, really just learning about ourselves and learning what we've done, we've really put into play a lot of things that have helped us take the next levels and take the next steps. And a lot of that's on fitness. I'm an avid runner. I don't think I'm a runner, but I run. That's my thing. And I run a lot. Did about 500 miles last month. It's something that gives me the space in my mind to push forward and find the mental fortitude to really go in there and continue to test myself and find the best for that. And we've met at some of the meetups here in New Jersey. I run a meetup that's a multifamily meetup called New Jersey Foundation, Multifamily Foundation, where we just target talking about multifamily and just the steps it takes to go in there and accurately and successfully buy multifamily properties.
That's awesome.
yeah, that's a lot to digest.
Yes, it is. So tell us, Jason, how did you initially get started in real estate? What kind of like piqued your interest in real estate?
So you're here in New Jersey. You both are. So you're fluent in Hurricane Sandy. So Hurricane Sandy happened. It's almost on 8-9 years ago now, right? And so, or at that point, well, I was in New York City. Had some businesses. Made some business, sold some business, started some businesses, and we were working. Peely and I were living together. And my dad has a heavy construction company here. I'd worked in the company in the past and transitioned away, but the company was really delegated to do flood work. And so when this happened, there was such an influx of work that we came out, my brother and I, that really helped the family business. And this is something that it was great to work the business, but we always knew we wanted to find something that we could use scalability and get our time back. And with Hurricane Sandy, we were helping a lot of people and doing a lot of jobs. And if there was an extra day and 10 extra hours, in a week, we could have used them because that's how busy it was. So we knew we wanted to find something that could give us the life we wanted and our time back, especially as, we were having our first baby, growing a family, to know that we weren't going to be available to do the time we want. We were like, man, okay, we have to figure something out. So thought about real estate. And of course, Peely went out and got a real estate license. And then we started doing some active things like flipping and wholesaling and Airbnb. And why that was going well, we quickly realized that we were just adding on another point of being busy to our lives. And so we weren't getting our time back. We're actually going the opposite way. So we're going farther from the goal, right? But we had to do it to figure that out, to figure that next step out. So Peely had met someone who was buying rentals, single family homes out of state. And we looked at that, and it just, something dawned on us that was a model where we could use basically management experience and other experience that we really excel at to our advantage. And so we started buying not single families, but 2s, 3s, and 4s out there. And that gave us the ability to find a property that wasn't performing, put together the teams, the property management teams, the construction teams, go out there and take a property that was basically offline, put it online, and then benefit from the economies of scale of having multiple units. And that actually started working. All of a sudden now, we're not doing the work. We're not physically doing the actions, but we're now using the resources available to be able to scale and buy properties. And next thing you know, we have money showing up in the mailbox, right? So it's a great feeling.
Mm-hmm.
Yeah.
But we noticed that that was just the first step, right? You can only take that so far. Now, if you wanted to scale that was going to create so many different layers. If you want to find a bunch of houses, and now you have a bunch of different things that are going to happen across a bunch of houses, and you weren't going to scale quickly. You're going to scale in stages, right? So we said, well, what's the next step? And if we could do it here, what's the difference from doing this from buying a 10 unit, a 20 unit, a 50 unit, or a 100 unit? And it dawned on me that that was the step. That was the next step here. The next logical step is, okay, well, let's go from this. We'll sell these and we'll move right into larger multifamily. And when we did that, we basically started learning everything we could, really positioned ourselves to say, okay, this is the space we're going to go into. We're going to focus on that. And that led us from, buying those 3 and 4 units to our first acquisition about, a little over 3 years ago now. That was a 94 unit.
Diving a little bit deeper into your story, Jason, how did you get started with the 94 unit that you purchased? That was your first syndication, correct?
Correct. It's going to sound like, okay, yeah, of course. But the first thing was to make a decision that's what we wanted to do. And so many times investors get stuck because they get stuck in the repetition of, okay, well, there's all these great things to do, right? I can do mobile home parks. I can do flipping. I can do wholesaling. I can do wholetailing. I can do Airbnb, and they're everywhere, but they're nowhere at the same time. So they're not making traction. So when we knew we wanted to be in that space, the first thing is we went on just a trajectory of just massive learning, right? So to take it all in and understand how the space worked, so we could take that first step to really talk, right? So we could understand the conversation we need to have to get ourselves to that next stage. So that was it. It was a learning phase across the board and surrounding ourselves with other like-minded people that were doing what we wanted. So to do that, to take those steps initially to say, this is exactly what we're going to look for. Okay, how have other people done this process? And to jump really into the whole learning stage from the onset.
To make a quick comment, I think I'm kind of like in that stage myself where I do want to get in, but I have like not really my foot in the door yet, because I'm still focusing on fixing, flipping, doing the Airbnb stuff, doing the buy and holds. So I'm kind of like everywhere, but nowhere. So I'm in the middle of all of it, kind of like you were saying.
But you're making massive traction, right? So what you're doing is sometimes the inability to decide on something keeps most people from starting, right? And I see it a lot at the meetups. It's just that taking any action is better than no action, right? So if you were sitting here saying, "Oh, I'm thinking about flipping, I'm thinking about buy and hold, I'm thinking about Airbnb, I'm thinking about construction," that's a different narrative because that's someone who can't make up their mind because the internet gives us way too much information, right? And at some point you have to take that step. And I see it many times that someone does so much research and like research to death, right? Where like you've got everything analyzed, you got all these spreadsheets and all these things, and then day one, either the spreadsheet goes out the window because now it's real life, or you quickly figure out that you just don't like it, right? You just don't like it. But if you just had taken the time to learn enough to get going, you would quickly understand what's that next step, whether you like it or not.
Yeah, no, I definitely understand where Joey's coming from, and to Jason, because like I have an Airbnb as well. I have several buy and holds. I have a few flips going on. Heck, I'm in Texas right now because, again, like not just to meet my friend, but also to look at the market here, get a better idea, and hopefully learn a little bit more about some mobile home parks in the area and apartment complexes so I could get a better gauge of where I actually want to be, especially, post COVID-19. So like,
but you're on a growth stage, and that's where we were. We were learning, we were on that learning stage, and then learning becomes action, right? So, there may have been a point that if we were in that learning stage and we found, well, you know what, we thought it was the direction we wanted to go, but maybe multifamily wasn't right. Okay, we're at least on that growing stage. And so it's just now, where do we take the growth of learning and make the first step? Was that first initial step? And for us, it was surrounding ourselves with like-minded people that were doing it. So now we could see action steps, right? Not just the thought, because you can go on sites, you can get the information, but it's like if I wanted to ride a bike when I was a little kid, if I went to read about riding a bike, it's not the same. I could read every book possible, but then if I put it into, just physically riding a bike, it's two different things, right? Just because I read everything doesn't mean I can ride a bike. So seeing other people doing it, making it real, that's when you can go out there and take action.
Yeah, that's for sure.
Yeah. I guess we kind of got a little bit sidetracked, but Jason, if you wanted to continue, what actionable steps you kind of did for your 94 unit that you purchased?
Yeah, it's literally still the same steps we do today. So of course, when we go out there, we'll find like-minded people so we understand the space. But then from there, we want to make sure that we're fluent with now the type of properties we want. So we want 75 to 150 units, BC assets built 1970 to 2000, pricing between 3 and 12 million. This is going to be market specific. So some markets can be 8 to 12, some markets 3 to 7. But in that fact, we get very specific what we want. Then we learn the market that we're focused on, because we're not buying the entire market, we're buying the submarkets. Because just like any town you're in, there's better parts, there's worse parts, there's pricier parts, there's better school districts, there's worse school districts, there's more rural area, there's more dense area. So you want to know where is the area that fits your model. So for us, we're looking at blue collar working class housing. That's a very big niche. It's never going to go out of style, and it's always of need, and nobody's building it, right? Building a Class A. So it's a part where there's not enough units for it, and it's always something of service. So we focus on those buildings. And once we do that, we're working on building our team, right? So we want to have our internal and our external team. So for us, our first deal we wore the majority of the hats ourselves, right? We found the deal, we raised the capital, we sourced all of our team members, we do the asset management, we do the due diligence, we do the underwriting, and we work it to closing. And now we're in charge of all the repositioning plans after. Those are all the roles that you could wear or have other team members wear. So some people are better at the asset management than they are at the underwriting, so they may partner with an underwriter or other. But as our point of building out our team, then we went and found brokers. We found property managers. We found our insurance brokers, typically like you would do on a typical buy and hold, except we're making sure that they're outfitted to work in the space we want to be in. Brokers, they're the ones focused on these large multifamilies we want to go after, start creating those relationships. Property managers, that those property managers are conditioned to work on the type of assets that we want. They're not doing, single family houses. They're doing large apartment complexes. So they know the routine. And now we if we need contractors or any of the other trades that we're working with to build that team out. And then building out basically our legal structure, our syndication lawyers and our closing attorneys and any of those partners there. So we have a network. So when we do this, we now know the resources available to us. So as we take that next step, we can continue to grow in the process. Many times the step that happens that gets people in a bind, I'll call it, is that they find a deal and then try and find all those parts. But it's like, you need a wrench and all you have is a hammer, because that's the first part you can find and you need it quickly. You're trying to use a hammer when you need a wrench, right? And so lots of times you're not having the right tool because you found the deal too quick. And then you're not ultimately able to assess the deal properly because you've taken the steps out of place. So we'll find a market, we'll build the team out, we'll start building our investor database. And we do that we started providing, the demo deal of what we're going to look for, because we didn't have a deal yet. So we just said, hey, investors, what are you looking for? What kind of opportunities are you looking for? What is it that you're looking for in your investment structure? And, some may be looking for portfolio diversification or cash flow or tax advantages, depreciation, you name it, right? But we understand what they need, and then we talk to them about what we're doing and what we've done in the past. And it gives us the confidence that when we have a deal, we have investors around us who are interested in what we're doing and interested in the returns that we're going to be looking to offer. And we do the same thing with debt. We start to understand how much debt we can qualify for. And if it's not us, do we need to bring in partners that can help us qualify for more? And so now if we figured that we could, potentially have the investment for a $10 million building or a $5 million building, now we have confidence that we can go out there, because now we have the market down. We have the team in place, both internally and externally. We have the investors online. We have the resources for what we want to do to take it down. Now we can go out there and now start targeting deals. And when we start target deals, we can make offers with confidence that when we get the offer under contract, that now we have the pieces in place. So we did that in the beginning, is that we just built that structure out. It's still the structure we do today. Just get ourselves set up so when we walk into a deal, we don't have to feel stressed because we've already put the steps in place. Because just like any real estate transactions, enough things come up that are just out of the blue, that are just wild cards anyway, that you want to have everything in your control. So when those things come up, you can focus on them and you're not focused on trying to find a bank or raise money or do all these other components along with having these things that are kind of offshoots from the goal.
Gotcha. So, if we want to step back a little bit in terms of, like you mentioned, raising money, but when do you start actually raising money? Is it when you find a deal or even before you find the deal?
Always before. Yeah, I'm really, and I don't even think it's about raising money. I generally do these 5 steps. So, I'll just be excited and talk about what we're doing. And the conversation with an investor will be learning what they're looking for. Because I may have, to me, the greatest deal in the world, but it just doesn't fit them, right? If I have a deal that's, a Superman deal, and it's a 5-year hold, and these people want to have an investment that's short-term, 6 or 12 months, well, it's not the right deal, right? And we're offering passive investments, and if the person wants to be active, it's not the right deal, and that's fine. We want them to be psyched to be in the deal. So generally, it's understanding what they're looking for, so we can help them with the opportunities we potentially have. And then the next step would be me talking about myself, my track record, whether it be in real estate or other things I've done in my past, right? If I don't have multifamily experience, so I'll talk to my business track record or some other track record, what I've done to show that if I say something, I'm going to follow up with action. And then I'll talk about the multifamily space. Why do I like multifamily? What is it about it? So you have cash flow, you have appreciation, depreciation, debt pay down, tax advantages, asset-backed investment, where that's not available in so many other asset classes or so many other spaces for investments. So it produces great returns, and it's historically been one of the safer investments. And then I'll talk about exactly where we're looking. Okay, I'm looking in New Jersey or Texas or Kentucky. And why do I like this market? I like this market because there's job diversity, there's job growth, there's path to progress, there's a need for housing, and there's a housing crunch. And so I'll talk about what I like about it. And then I'll talk about the deal that we're looking to get. I found, though, if you take all this and you try and do all that in one sitting, and I just came to you, Jonathan, and I just said, hey, what do you want? Okay, hey, great. I'm Jason. Okay, great. Here's the space. Here's the deal. Here's this. You want to talk about investing? It's so much, right? That people
shut down.
Shut down and retract because it's too much, right? It's just too much because maybe people have never even thought about investing in the space because they didn't even know it was available. They just thought it was for REITs, or they just had no idea. So you overwhelm this with their information. You'll find a lot of no's. And what we find is because we do this ahead of time, we'll have sometimes be able to close a deal out in a day once we have one, or less than a week, because 95% of the conversations we had prior just have already committed, not give us money, but committed and said they'd be interested when we do find that deal. So the work has already been done.
Got it. That makes sense. So do you, I know you mentioned when you did your first deal, you kind of built like a mock-up deal of like how everything was supposed to go. Did you set up like a whole like PowerPoint presentation to discuss with investors, or were they all accredited, or like how did that work?
Sure. So no, I didn't. I made a one-sheeter just for the same part of like, okay, I don't want to give them so much information that they're overwhelmed. I want to be able to go in there and answer questions, because each investor is going to have a different talk set that you're going to want to speak to, right? Some may really want to dive in the weeds and understand the IRR, understand the hold period and other points. Others may want to understand, about the property management company. Others may just want to understand you because they're investing in you ultimately. Yeah. So knowing the questions, you don't want to overwhelm them with information. We have an investor deck. We share our investor deck ahead of time before we'll have a meeting now. And then on that point, then we can share out, a deal or the one page. And that one page just basically outlines a basic structure of the deal so they can get comfortable with the model, and then they can come back with more questions. If they want more information, then we'll supply it. But we don't go from the start to really just overwhelm them with paperwork, because you know what it is. If you're like me, if I get 25 pages, I'm like, oh, what am I doing? It's just too much. I want to understand the process first so I can come back with better questions. And we use a 506B, which means that we raise from both accredited and sophisticated investors up to 35 non-accredited investors per deal, but they have to be a pre-existing relationship. So
Okay.
if you and I were just to meet today and I had a deal, I couldn't solicit you with this deal because we have not created that pre-existing relationship, saying this was the first time we met.
Mm-hmm.
So for that, we have to have that pre-existing relationship that we've now created. So doing that and, creating our network and continue to have these conversations and continue to network and continue, that's another reason to start creating these relationships before you have a deal, because now we're ultimately understanding that we have a track record of showing that we've now known this person, had communication with this person, understood their background, understand their investment background and their experience level. So we could talk to that when we do have these deals.
Okay, got it.
I see.
So with all that, you'd probably recommend talking to a securities attorney to confirm in-depth definitions of a relationship, a pre-existing relationship, and things like that. No?
It's always good to have a conversation so you can understand the terms, understand where, because I see a lot of things today where people are, they're graying the line, right? And just they're seeing other people do it, so they're doing it. And sure, maybe the SEC is a little busy right now, but at some point they're gonna transition. They're gonna pick someone out, right? Who's pushing that line, pushing that boundary a little further past. So it doesn't take much to do the things in the right way. It's just that when you do get caught with a lack of time, you will find whatever means necessary to get it done. And that's where you see people pushing the elements because now they're short on time, right? So part of the 506B is I can't openly, solicit, where a 506C, if I was to talk just to accredited investors, I am able to openly solicit. So I could do offerings that were across social media or other. I could speak to a wider audience because the accredited level is that higher threshold.
Got it.
Nice. So if somebody wants to become, I guess, an LP investor, which we were kind of talking about, the accredited and sophisticated investor, how would they find you? Like, if somebody wanted to start investing in, let's say, apartment complexes, what are the ways somebody would, be able to find you?
Well, part of what we've done with our podcast is just create our brand, right? And continue to get the word out there and just help other people. And so the best part is that referral, right? So if someone comes to me through a referral, that's great because they understand, that person's already talking to them about their process. But that if I was an LP, I'd like to have a referral, but also to understand what I'm looking for from an operator. So I could go in there and I'll have people reach out that are, reach out cold, that just want to talk, so I can better understand them and they can better understand me and they can understand my process. So for that, you can look at who's doing active syndications. There's a bunch of Facebook groups. There's a bunch of people that are available in there. Speak to other people that are investing in these syndications. Speak to other operators because, I may not have 50. If you want to invest in 10 deals in a year, I'm not going to have 10 deals. Right. So it doesn't hurt you to ask me who are some other, syndicators that I trust. So if there's someone that you're currently working with, you can talk to them and ask them, like who's a person that you like to work with.
Okay. So you're saying like Facebook groups would be probably the best way to find
podcasts, Facebook groups. Yeah, you'll see a lot on podcasts. There's a lot out there. You can go to see syndicators that are doing it. You can listen to their story, see how they're running their operation, and get a better feel from that
category. Which the operator or the GP investors. We kind of talked, a lot about that already. How to get started and things like that. What would your advice be if you were kind of starting fresh? Like if you didn't know pretty much if you've never invested in real estate or anything like that as a pure newbie, and you do want to get into becoming an operator, go out and finding deals and things like that, how do you, what are some of the steps you would recommend taking?
I would align with the current operator.
Okay.
And see what it is that you could bring value to them. Maybe you're good at websites, or maybe you're good at lead generation, or you can cold call, or you can do a step in there to provide value to that operator in exchange for seeing behind the curtain. And then you can quickly gather or garner experience by doing a step in the process to make that operator's life easier or more proficient, right? So that would be a step. Or there's so much free information out there. There's podcasts, you can dive in our podcast. We have one day a week. We just touch on multifamily. You can listen to a ton on multifamily, right? And just dive in and just understand the pure mechanics. We had a guy on the show today, got 1,100 units down in Houston, and just talking about the evolution of what he's done in the last 9 years of the process, right? And so you listen to these people because experience is everything, right? This is not a flip you can be in and out, in a month and 6 months and 5 months. These are not, quick turnarounds, right? The patience is the key here. So what can you learn on the front end so you're not paying for it on the back ends?
Gotcha. That's good advice. I'm looking for that, by the way.
Always.
So let's transition to now, right? What are you doing, if you're doing anything differently with the whole COVID environment? Are you doing anything differently?
So when it first happened, we definitely stopped all non-imperative CapEx projects, right? So painting the building and other things like that. Like, okay, we don't need to do this right now because there was so much uncertainty, right? So we definitely did that. And we, of course, told tenants just to keep social distancing, that we were only fixing critical items. If a blind had a blind broken, we weren't going in there to fix the blind right now. We were making sure that they were vital to operations, just to continue to make sure everybody's safe from an employee and a resident standpoint. We're also continuing just to really dive into our expenses, dive into our core operation, to make sure that there was no extra costs that we were missing that we can cut back, because pennies become dimes, dimes become dollars, dollars become hundreds of thousands of dollars as you let them go right there. So looking at that, really diving into our core processes and just honing in. But right now we're into April and May, and we're having solid collections. We had very solid collections in April, and we're actually ahead of schedule right now in May that we were last month. So right now that's proving well. Now, can things turn upside down, and can everybody go back into a hole because if we push it too quick? Sure. But right now, we're optimistic that we're taking the right steps and things are moving in a good direction, which again pushes to the strength of multifamily, because you have a lot of people, 30 million plus out of work right now, but it's not like all these people are going to go homeless. Like, where are these people going to go, right? They need a place to live. So potentially, could we see some flattening in rent? Sure. So rent growth could flatten. Could it be negative rent growth shortly? Sure. But at the point that everybody's not going to be able to pay rent, that's a high order.
Gotcha.
So did you see anything with, or I don't know, some of the projects that you're working on right now, would you say that like cap rates or anything like that are being negatively affected because of COVID, or would you not know that where you are in the process of some of your projects right now?
We're still looking at deals. I think it's too early, right? There hasn't been enough time for it to really come out. And so owners, because we are seeing strong collections, there's no one in there that's like desperate to a point like I want to get out because no one's paying. And now I'm in more landlord friendly states, or maybe some other states like California's and the New York's and New Jersey, that you might see a little more of that distress, right? Because if evictions can't happen for 9 months or something, and so, or however long some of these states take it out. But right now, I do believe there's some runway here that's going to happen, that you're going to see some distress, largely, as in office and retail. I mean, there's going to be massive distress coming around there. So for you guys out there that can solve that problem, that's going to be a tremendous, tremendous opportunity for sure.
Yeah, it'll definitely be a huge value. Like, I know it's funny because I live in Belleville. Like, there's this strip on Main Street that had like, business after business. And even now I saw like half the business names got removed because I guess they know they can't pay the rent. So I can only imagine what the landlord's thinking at that point, Yeah,
so. Absolutely. It's highly unfortunate, because imagine your business did everything right and you just had the rug pulled out from you. There's businesses out there that have done everything right, and literally you're just and got put in a horrible position, and that's horrible, And so some businesses, this was just the icing on the cake. They were going to go out anyway, right? So okay, yeah, the process got quick. But there's other businesses out there that just really really got put in a hard spot. So it's unfortunate.
You had mentioned earlier, what are some books or podcasts or things that you like to listen to and that you can recommend to our listeners?
It always comes down to, I'm big on mindset. I'm big on mental fortitude and real estate. So of course, my friend Joe Fairless, he's got the Best Ever podcast, talks a lot of real estate. You can always go there. Andy Frisella, he's got the podcast. I think it's AF podcast now. I forget. He just changed the title, but it was the MF CEO podcast. So you look at things like that. I've been running a lot, so listen to some history podcasts because history continues to repeat itself. So Hope Through History was what I was reading. And then just a book like The Go-Giver. We had Bob Berg on the podcast. The Go-Giver is an incredible book. It just dives into the principles of just giving and being open to receiving, the chain of energy that makes the world go round. And the more you will be willing to give, because sometimes we get stuck in this point that we want to do, but we don't want to give, where the giving is the thing that ties everything together. When you bring that mindset and you look at that from even real estate investments, the world opens.
What's the name of your podcast again, Jason?
Sure.
I forgot.
Yeah, the Jason and Peely Project.
Jason and Peely Project. Okay.
And your meetup group is a multifamily foundation, right?
That's right. Yeah, Multifamily Foundation. We've been doing it virtually. We'll do another one next month here, just for time being. It's been great. A ton of people on, and just happy to help people. It's a free meetup. Come in there. You want to talk multifamily? We're there to talk multifamily.
Yeah, it's awesome. I mean, that's where I initially met you. Your meetup about a year or so ago. Unfortunately, I haven't had a chance to go there more recently, but especially now with COVID, it's a different story. But
yeah, now with COVID, I'm like looking at switching my strategies altogether as well, because don't like the rug being pulled right underneath me like Joey, but like I was projecting like at least 50-60K more my profits this year than what I'm getting now, and like some people could say that's like a humble brag or whatever, but like realistically, it was looking to scale my business even larger. So it's multifamily. I noticed a majority of my tenants paid rent except for one, and he pays like, weekly now. So it seems like the best idea to move forward.
Yeah, the ability to be nimble, right, and being able to pivot and not get stuck in the blockbuster mentality where things will never change, and then Netflix comes around and you have the option to buy them and you say no and you get crushed, right? So you never want to be in that position. You want to continue to survey, and this is interesting. Things will go back somewhere, but we don't know where, but they're not going to go back to exactly how they were. So how do we adapt and how do we find those?
Exactly. So, Joey, I don't know. Do you have any other questions for Jason?
Where can people find you on social media? I know you're all over.
Sure. Yeah. So go over, you find me, Jason Yarusi, go Jason Yarusi on Instagram. Easiest way to find us, or Yarusi Holdings. We're doing our live show Monday through Friday, come on at noon right there. And yeah, Jason and Peely Project over there, the podcast.
Yeah, and you even had Gary V on your show.
Well, we were actually on Gary V's. We're on Gary V's
on his show. Oh, okay.
Yeah, which was
I know
awesome.
I remember seeing you ask, you do the ask of when is he going to come on your show? So I'm actually really looking forward to that. That's
gonna be super, right? So he's got some time, so we're gonna work on that. But that's coming around. I got a couple fun people coming on the show upcoming, and yeah, guys, I'd love to be on the show today. Thank you for having me.
No problem. Thank you.
Thank you for being on.
Yeah.
Take care, everyone.
Take care.